Hi and welcome to the Market Alert for Monday the 21st of March, first day of spring 2022. Can we squeeze much higher? This is from Friday with the expiration of the 3 trillion of derivatives. The market was brutal and continued to move to the upside. Bit of weakness overnight though, so let's have a look at a bit more detail. But first, economic news for this week. Today we've got Lagarde and Powell out today, one at 7:30 a.m, the other at 4 p.m. And again, there seems to be the theme of the week. Tuesday, Lagarde is out again. Wednesday, we get the UK Cpi numbers, and you can see their forecast to be 6%, previous 5.5. What a joke that is. Bailey is speaking, Powell's speaking as well on Wednesday. We've got FOMC Bullard speaking on Wednesday evening as well at the usual FOMC time, 7 p.m, which seems slightly odd. Well, that'll be 8 p.m. as normal because obviously we've still got a situation where the clocks are different at the moment. They change this next weekend in the UK. And then again, FOMC is highlighted for Thursday. We've got all of the flash numbers out on Thursday as well, and then into Friday. I'm just looking to see if there's any more central bankers. We've just got one at Wallery speaking on Thursday as well at 1:10. So a lot of news this week, but the main focus for the UK is going to be the CPI numbers, which are out on Wednesday, 6.0% on inflation. I say an absolute joke. Food prices have gone up by 20% in the last year and continue to do so. So let's move on and have a look at the market. Start off with the Dow. You can see the market being pumped on Friday with the expiration of the 3 trillion in derivatives and the options expiration, the quad witching, trading up to the 89% that was drawn in from this area here. You'll see and get the right tool up there. There we go. So from there to there, you will see that we're back to 89%. So the market looking to pull back at the moment. That just depends on whether there's going to be any more ceasefires or not, but this is the downside target should there not be. I see on the Sky News site this morning they're saying that the latest ceasefire has failed. We're a couple of days past it, but don't hold your breath. Anything to bring the market back, which we've seen over the last few weeks since the war started. And here you can see the squeeze to the upside there. The market sideways to begin with when the Dow opened on Friday in the cash market, and then eventually, like I say, being squeezed higher. It's been drifting down so far though. We're down 100, 200 points to the DP at the moment, an area where the market is currently finding support, which is what you would expect. Meanwhile, in the German DAX, we can see that, let me just bring this down a bit so we can actually fill the screen there, and you can actually see the chart in its full glory. So the DAX also moving down overnight, also trading up the other day towards the 89% retracement as well. Squeeze not as big until you have a look at the 30-minute chart, and you'll see following the Dow on Friday afternoon there. Big squeeze to the upside after being oversold down at the 200 MA. And if I just compress the chart a bit there, you'll see that we were down at the S2 as well. Crossover, parabolic changes. You've got all of this volume here as well. Big cluster of volume. Demand coming in and then the market holding, and then being squeezed to the previous days, towards the previous day's high, stopping at the R1, and overnight, the same as the Dow, prices have moved back. Again, we've got 100 points there, 200 points on the DAX, and you can see there they bought back in, despite the fact that it's low volume. You can see that it's a lot more volume than we had in the previous several hours on the overnight market. So we're moving back towards the DP, which is no surprise at all. Again, it's all down to whether, again, this news of ceasefires is what's bringing the market back up, and they're just taking advantage of any opportunity they can to bring prices to the upside. Just going back to the daily, on the downside, just in case we don't get the move we would hope for on the upside, then these are the downside targets. You can see that 38% is more or less the low of Friday as well, so you want to keep an eye on this one. In the 5-minute chart, let's just drag the chart across and have a look at Friday. It was fairly choppy. We started off okay with the market moving down, then it was pushed back up and there's retracements in here. Very choppy as the market waited for the quadruple witching. It then eventually started to move down, which is what you get with the start of the session, and then once the quadruple's over, you then get exactly what we've seen in the Dow and the bigger time frames in the DAX, where the market is then pumped back. You'll see the overbought, oversold, overbought, oversold, overbought, oversold as the re-entry to the trend that the market therefore changed and established. Overnight, you can see that we're heading back to the DP. We just put in a big bar there for the last 5 minutes. We've got another 25-minute yet before the futures open, but nonetheless, the market already staging a move back to the upside and towards that 89. But the DAX has got to take out a few highs en route, including the overnight high Fridays, Thursdays, and Wednesdays, if it is to move to the upside. You can see that there with the horizontal line. I'm just going to draw that one in actually, because it'll be useful to have the price there so I can see it. So we're looking at 14,556 on the upside there for the DAX. In the currencies, I can find the currencies. They should be here somewhere. Start off with the yen. Daily chart, the yen continuing to move up, also stuck at the 89% retracement as well, having been oversold at 78%. Demand, buying, divergence. The market has moved up for the last couple of weeks and is now sitting at 89% retracement, due for a correction. On Friday, in the smaller time frames, we were oversold at the open. We got demand, and then the market stopping at the 50 bar moving average. Also the BRN, which is at 155 or 155, I think that is 156. And also you've got your demand there as well, crossover, and then the market up at the moment, sideways, waiting for the kickoff at 7 a.m. In the pound, not so healthy for the pound. If we have a look, still struggling to move up off the lows that we've seen here, sideways, and we could see a bit of a retracement in the pound there. There's the downside targets for the pound. And the reason I say this is you'll see when we look at the metals and the dollar index, the dollar's moving higher, obviously, if the metals are moving lower. The pound on Friday in the 30-minute chart is exactly the same as the yen. Market down to begin with. Then we've got the demand, we've got the crossover, divergence, and then the market moving higher in the pullback, as you can see at the moment, wanting to get back above the DP. Back above the DP, we go back towards Friday's high, and we'll just draw these areas in here. Failure to do this, of course, will see the market move to the downside there as well. So we just remove the 38. We're sitting at the 50.62 area at the moment. So a break below this BRN move lower will take into account the 200 MA and also Friday's low as well. And then finally, a quick look at the metals. Silver hammered on Friday to the downside. Again, I'm still expecting this to move lower, down to the... Well, actually, this is gold. Wouldn't I, if I was talking about the right chart? I thought it looked odd. Let's go to the right chart. That's more like it. So silver also hammered to the downside on Friday, looking a bit weak overnight as well. That's because the dollar's up. Again, any talk of a ceasefire will see this move down. And this is the area for me where they're likely to bring it back and try and hold. If it breaks the 200 MA, then we're going to go down a lot further. But we are seeing the silver market now oversold. So the 78 and 89 is going to be very important, plus the 50 EMA as an area of support, unless, of course, they can manage to move the market back to the upside. But I very much doubt that at this point. It may pick up a bit on Wednesday with the UK inflation numbers coming out. They're going to be out 2 weeks before the US CPI numbers. Since the war started, they will be the first to show the effect of the $139 per barrel for crude, which we'll look at in just a second. A bit choppy overnight, but you can see again classic LBMA opening there. The market hammered down, and then it's just stayed sideways and tried to move higher. It's failing at the DP. All of the averages are above prices at the moment as well in the 30-minute. And yes, there. I was looking for the 200 M8s there. Just followed it through. Yeah, so everything now starting to point to the downside. So watch the low by lunchtime. It should be hit with silver, if that's the goal of the manipulators today. Gold stuck at 78% retracement again, showing a bit more strength at the moment, which you'd expect with the background of the war, but oversold as well. A lot of volume here in gold over the last few days as well, starting to drop off a bit though. So activity moving from there. And then crude oil, you'll see there moving back to the upside over the last few days off the 78% retracement and being oversold, crossover demand, and now moving back up. And I see wishy-washy Sunak is talking about a 5p off the price of fuel this week. Well, good luck with that, because it's not going to last. Looking at the crude oil chart, all helps though, but they know it's just a token gesture with what's coming down the line. Okay, that will do it for this one. Let's see if the market's got the strength to move back to the upside today, and I suspect it's likely to do so, given that there's not really any economic news, but we've got two central bankers that are likely to help pump the market back to the upside with the rhetoric today when they speak. Okay, that's it for this one. If there is anything else to report, I'll let you know. But as ever, thanks for watching. See you in the next one.